Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
You are listening to the financialsurvivalnetwork.com. I'm Kerry Lutz on 1230 WBZT. Markets go up, markets go down. Another day, another gold raid, probably in celebration of the new installation of a new Fed chairwoman. I know Yellen isn't officially the Fed chairwoman until January 1st, but let's face it, effectively, she's now head of the Fed. With us to talk about it, Nick Santiago in themoneystocks.com. Nick, welcome back.
Great to be back, Kerry. Thank you for having me.
Hey, so new Fed chairwoman, time to break out the champagne. Happy days are here again.
It's really just Ben Bernanke and drag. There's no real difference between who they have at the Fed. The same policies seem to be all they're going to do. So, I guess, the markets are going to be happy for a little while, but that doesn't stop the fact that the debt in the country, in the United States, is going up and around the world, and we're printing more money than ever.
Yeah, some things never change, do they?
No, they don't change until they have to change, and right now we're not at that stage where they have to change. So, I think it's a good time to be a trader, play up both sides of the tape, up and down and all around, and hopefully we could time this thing when the end is near.
Yeah, and when is that going to be? I wonder. Everyone keeps wondering,
Well, I have some dates that I'll be looking at, but we still have time for that.
Yeah. So, how much time do you think we have for all this?
Well, I think right now, when we look at the markets seem pretty jovial, and they can last for a little while longer than most people think. But I would be really, really cautious going into 2014. I think that's going to be a time where traders and investors are going to have to take a deep look in the mirror and look deep into their soul and say, how long can this go on? And I think that's going to be some point next year where we're going to really run into major headwinds.
So you're thinking next year, so we still got a few more months to go, huh?
Still got a few more months. 2013 is a bullish year. As you know, I've said that on your show repeatedly. So cycle-wise, yes, I do think we have some time. The markets right now are rebounding a little bit off of the news that we've heard recently. The politicians are going to come together and sing Kumbaya. But the reality of it is that's going to be a short-lived rally.
Yeah, how long do you give the rally?
A few more days.
A few more days? And
yeah,
then,
that should be about it.
Yeah, so what are you thinking of the shutdown and the debt ceiling and all that?
Well, considering that I think in history the debt ceiling has been raised over 75 times, and I think it's been over 45 times since Ronald Reagan, it's pretty incredible when you think about it. So, they're going to raise the debt ceiling. We're going to just print more money. The same game is going to go on. Nothing has really changed. We're pretty much doing many of the things that we did back in 2008. So I don't know if there are many changes that are taking place in the political world or in Washington or in the trading world. So, we're just continuing to repeat what we've been doing for many, many years, decades.
Yeah, so there's no financial discipline that's going to come into the system, is there?
No, there's no financial discipline. The only time financial discipline comes in is when something happens. And right now, the markets are making new all-time highs, but yet you have, stocks like Microsoft, Intel, Cisco, Hewlett-Packard that can't even get back to the 2000 highs, yet, the markets are at new all-time highs. So it's not even about earnings anymore. It's just about money, liquidity, and how much easy printing, how much easy money can go into the system. That's really what it's about.
That's it?
That's
the whole thing? So it's nothing to do with fundamentals.
Oh, fundamentals. Not only have they died years ago, if they ever were in place, but they're non-existent.
Nothing, huh?
Nothing. Well, you tell me. If you take a look at Apple, what's its PE ratio? You take a look at Amazon, what's its PE ratio? Does it make any sense? Of course not. So, fundamentals have always been useless, in my opinion. They always will be useless. The thing that makes money in this market is understanding how money flow works, and that's really the bottom line. When are the institutions going to come in and support an equity? When are they going to distribute an equity? And if you can figure that out, you pretty much have it. And I think, we've done very, very well this year and continue to do well, and we'll continue to do well in the coming years because we understand money flow. And that's really what people need to recognize, whether you're an individual, whether you're a trader, or whether you're just a spectator. It just comes down to money flow.
So it's just money flow, and that's it, huh?
That's it. And the more they dilute the money, the more the money needs to flow. And once that stops, then the whole game is over. So I think, I don't want to sound ring off the Armageddon bells or anything like that, but I have no choice. What they're doing is very, very dangerous.
Right. And so money flows trump all effectively is what you're saying.
Absolutely. There's nothing else realistically. I mean, you may hear about a stock posting good earnings and moving up that day, but how many stocks last quarter during earnings season, as we're about to approach earnings season now, but if you take a look at last quarter and we had earnings season, look at the stocks that missed their numbers. I mean, it was just a staggering number of equities that didn't make it. And I have a list here for some of them: Google, IBM, Microsoft, Cisco, Apple, Amazon, Procter & Gamble, Qualcomm, 3M, UPS, Federal Express, Walmart, Cisco, Sears Holding, Hewlett-Packard, Abercrombie & Fitch, J.P. Morgan. All of these companies missed numbers last time, and missed in a big way, but yet the stock still went and made new highs. How is that possible? Because it's liquidity in the system. Money has to go somewhere.
So it's just liquidity. There's so many dollars flowing around that they got to go somewhere, and it doesn't matter where.
Right. Well, we know there's $85 billion a month being created out of thin air. Where's that money going to go?
Mm-hmm. That's it, huh?
That's it. It's not really, there's no rocket science to this. We don't have to dissect the atom. It's pretty plain and simple.
Yeah. Well, I agree with you here. There's really no place else to go. Also, if you look, where are you going to put your money? Into treasuries?
Not me.
Right?
I'm not putting it in the treasuries. And once the treasuries people start to lose faith in the treasuries, then it's the beginning of the end. But, you're getting nothing in the treasury. You could, 10-year today is yielding you, 2.7%. A year ago, it was yielding you 1.39%. So, either way, essentially, we're in a negative rate society.
Right, and that's just going to go on, right? There's no end to that in sight.
I don't know. Either. I don't see the ending because I don't see growth. I don't see real growth out there. So I don't know with a central bank that has, dual mandate or triple mandate, unemployment, as well as providing liquidity. I don't know when or where there's going to be growth, right? We're still dealing in a deflationary environment, so I really don't understand where growth is going to come from. At least I don't see it at the moment.
Right. And without growth, and what about the real rate of inflation here, Nick? What's really happening with inflation in your book? Well,
inflation in economist terms is very, very low, right? You can buy a cell phone cheaper than ever, an iPad cheaper than ever, but we can't eat cell phones and iPads. So what happens in this kind of environment right now is that eventually the goods that you need to survive become more expensive. The goods that are novelty items become cheaper and cheaper. So, we're still dealing with a deflationary environment. I really don't think there's any inflation at the moment right now, and I think we're seeing that because of the move lower in gold. Gold is telling us that there's no inflation right now.
Mm-hmm. So there's no inflation, but yet certain things, food in the supermarket, other places, you've got it, and at some point the inflation has to kick up, right?
Well, that would be the Fed's dream. The Fed would love to have inflation right now. They would really welcome it with open arms because they don't know how to counter deflation. And we know that they don't understand it is because Japan has battled it for over 20 years, and they haven't found the answers. Even Japan now, which is printing more money than the Federal Reserve, I believe 3 times the amount, with an economy that is 1/3 the size, is still really struggling here at this stage of the game. So there's definitely some major headwinds, and I don't have all the answers for it. As a trader, I mean, I never want to see the system blow up because
Sure.
This is where I make my living, and this is where the markets are what I rely on. But to be honest, I mean, you have to look at these markets and you have to say, okay, there's got to be a time where this has to stop, and we just can't move the markets higher forever on the back of money printing. But it seems to be going on all over the world.
It sure does. And it doesn't matter where, whether it's China or Russia or any place, right?
Doesn't matter. If you look at, the European Union, you look at Japan, you look at Australia, you look at China, you look at anywhere. I mean, it's just India. I mean, look at India already. They're facing inflation. So, they can't cut rates like these other countries can. But it's problematic. It's a global problem, and it will have to be dealt with in the coming years.
Yeah, how are we going to deal with it? That's the question. You know what's happening. You see it. How are we going to deal with it?
Well, I think the one way that people can deal with it is to have a hard asset, whether it's gold or silver or have an oil well in the backyard. You're going to need some kind of hard asset, and that's really the key, in my opinion. Farmland, something that's a hard asset is recommended in my book. I don't think people are going to have that. I think they're going to be caught empty-handed when it's all said and done. But the best thing you could do is to have a hard asset, whether it goes down or not. At least you have that tangible asset at your possession.
Yeah, well, kind of echo my feelings on the subject, Nick. Well, on that note, we got to go. It's Friday, but we're really happy you came back on the show. Just give us your site again, Nick, and tell us what's available.
Yeah, come on over to inthemoneystocks.com. We trade all day, every day. We have 2 services, our research center, which will get all of our nightly setups. You'll get all of our cycle work. We cover everything from individual equities to commodities, to bond yields, everything under the sun, gold, oil, silver, it's all in there. And if you come over to our intraday trading room, you get to see our live desktops, and we'll see all the trades that we do each and every day.
All right, Nick, it's been great. Always a pleasure. You be well.
You do the same, Kerry. Thank you very much.
Hi, it's Kerry Lutz. I recently decided to move my retirement account into physical precious metals to hedge against the coming times. If you want to move an existing retirement account into physical precious metals that you can hold in your hand, tax-free, there's no company that can do it more quickly and efficiently than Regal Assets. It took them just 24 hours to open my new IRA account, and all I had to do was fill out one simple form. The best part is that Regal Assets does all the work for you. They cover the setup and administrative costs for 2013. If you're interested in making the same move I did, call 855-678-6620, 855-678-6620. That's 855-678-6620, or visit them at regalassets.com. You'll be glad you did, and tell them Kerry sent you.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.